Hi, this is CH. This video is part of a series of videos titled My ABCs, or Absolutely Biased Comments, on one mutual fund per video, to share how an individual investor like you and I can try to find out more about a mutual fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I am not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the M&G Optimal Income Fund. Now, the first thing we need to figure out as an individual investor is where can we obtain information and documents on the fund. M&G Investments has been focusing primarily on private and institutional clients in the Asia region for the past decade, and has only in the last few years started to spend more efforts in the retail client segment. There is a proper Singapore website for investors, although you will have to go for private investor selection as there isn't a retail investor choice. Nevertheless, it seems that M&G Investments has standardized the product offering in Singapore so that all funds and share classes shown via the private investor selection are eligible for retail investors. For this video, I had to also explore the UK and Swiss website of M&G Investments to obtain some additional information, which I will elaborate later. FundInfo is a global third-party consolidator and service provider for fund data and documents, and has information on at least 90% of the mutual funds offered in Singapore. So if there is a need, we will be checking the information on FundInfo as well. I have used the professional investor option for this screenshot, just to highlight that this fund has actually a staggering 77 share classes registered for Singapore accredited investors. For retail investors, there are 24 share classes available. Not as many, but still quite a handful for investors to try figure out which ones to go for. You can of course also get some information from your distributor, which is your bank or online platform that you buy funds from, as long as they have the fund on their offering list. And finally, the web is always readily available, waiting to answer your search queries. Before we go through the fund details, let's spend a quick moment to understand who the fund provider, M&G Investments, is and what they are good in. M&G, originally named Municipal and General Securities Company Limited, was established in 1931 and made history being the first in Europe to launch an investment unit trust, and thereafter continued to be pioneer in launching various strategies in the subsequent years. M&G Investments was acquired by Prudential in 1999. For many years, M&G Investments was seen as Prudential's asset management arm that focused on Europe-related investment solutions. East Spring Investments was the sister company that focused on Asia-related investment solutions. Prudential then tried to merge M&G Investments with its other UK and Europe business in 2017 into a new division called M&G Prudential. The new relationship was short-lived. In 2019, M&G de-merged from Prudential. The new entity is called M&G plc that is headquartered in UK, with M&G Investments as one of its businesses. Prudential plc became more Asia-focused and retained East Spring. Since then, M&G Investments started expanding its offerings beyond Europe, and today provide a decent variety of global fund solutions. M&G Investments manages about $400 billion of AUM as of end 2023 in 37 locations globally. Fixed income solutions comprise nearly half of the assets, while equities and private markets cover about a quarter each. This resonates with their reputation for being a strong competitor in several bond fund categories. M&G Investments started its business footprints in Singapore in 2011, but was only really aggressively expanding capabilities from 2019 onwards by setting up various investment teams in Singapore through the last few years, making it somewhat an Asia hub. Given its long history of investment capabilities and the commitment to grow business in Asia in recent years, M&G Investments is no stranger to receiving awards for its funds, again, mostly notably the bond fund solutions. Now that we have an understanding of M&G Investments' history and capabilities, let's talk about the strategy of the fund. The M&G Optimal Income Fund is broadly considered as one of M&G's flagship products. M&G therefore has created a fancy spotlight page for the fund that provides some marketing angles on why the fund is suitable for the current market environment, and as well some brief write-up and interviews on the fund managers. It, however, is missing the very important information, that is to explain the strategy of the fund. The only vaguely relevant write-up in the spotlight page is a short statement that says the fund is a global, flexible, and diversified bond strategy that invests in government, investment-grade corporate, and high-yield corporate bonds. The 4 key points below additionally indicates that the strategy combines macroeconomic views and bottom-up security selection. Unfortunately, that's pretty much it, and I wasn't able to find any further elaboration in the Singapore website. I also tried exploring the UK website because the strategy was actually originally launched as a UK domiciled vehicle, but no luck there as well. Finally, I chanced upon the Swiss Qualified Investor website and found exactly what was needed. There is an insights page providing details on the fund strategy, and there is an additional fund profile document available in the fund-specific page that covers similar contents as well. Now, why in the world would this not be made available to investors in other parts of the world? These things make me feel sometimes that I am doing detective work to hunt for clues and uncover secretive stuff, instead of a normal investment video. So here we go. Combining the information in the Swiss website and the fund prospectus, there is actually quite a lot of details available for the fund strategy. The M&G Optimal Income Fund is consistently positioned as a global, flexible bond fund that aims to provide attractive income. The keywords here mean that the fund's strategy is broadly unrestricted and can invest across the world and can change its exposures quickly in response to market changes. The main objective is to provide attractive income, although it doesn't necessarily have to be naturally generated income. As with most other bond funds, the fund combines top-down macroeconomic view and bottom-up security selection for its strategy. The fund invests primarily in 3 bond categories, that is government bonds, investment-grade bonds, and high-yield bonds. The benchmark of the fund is actually designed to be 1/3 Bloomberg Global Treasury Index, plus 1/3 Bloomberg Global Aggregate Corporate Index, plus 1/3 Bloomberg Global High Yield Index. Given the fund has a flexible strategy, it can and often deviate from the benchmark construct, which means there can be big performance gaps between the fund and the benchmark. On the same flexible strategy topic, the fund also has no credit quality restrictions, meaning it can have a pure high-quality sovereign bond portfolio of AAA quality or a pure high-yield bond portfolio of single B quality or anything in between. The fund is also allowed to invest up to 20% in equities if somehow there are companies with equities that are more attractive than their bonds. While it is stated that the fund's average historical exposure was 5%, it also means that investors should treat this fund as something that is slightly higher risk than other pure bond funds in the market. What the fund manager aims to do is to consistently adjust the fund portfolio in consideration of duration and credit allocation to find an optimal mix in different market environments. The fund deploys leverage, and it is stated that the expected average leverage under normal market conditions is 2 times. There are no details on the effects or attributions of the leverage in the portfolio performance. Nevertheless, there is no limit established for the usable leverage in the fund, so this is a potential risk factor. It is also stated that the fund needs to be at least 50% invested. This goes hand in hand with the 2 times leverage, meaning 50% invested, then lever up 2 times to get the full 100% exposure. But it also means that in theory, the fund can hold up to 50% cash in the portfolio and only have 50% of the monies invested. This is one of the highest cash flexibility stated in a fund strategy that I have seen across mutual funds. It does allow the fund manager to preserve capital in a very bad market environment, but this is not the normal practice for mutual funds that ought to stay nearly fully invested regardless of market conditions. Last but not least, it is useful to note that the base currency of the strategy is Euro. The fund needs to have at least 80% of its portfolio in Euro, be it through Euro-denominated securities or otherwise hedged into Euro. All the fund's other currency share classes appear to be currency hedged. There are also some ESG and sustainable finance related aspects, as well as exclusion criteria. However, given most mutual funds today have similar clauses in their strategies, I will not elaborate on them. In summary of what has been uncovered, the M&G Optimal Income Fund looks to have a very high flexibility in what it can do for its portfolio construct. The one thing that is missing is how the fund manager defines attractive or optimal income compared to the broad bond market, which I suppose is deliberately left vague to give leeway to the fund's performance. Let's now take a look at how the fund strategy translates into the actual fund portfolio. The screenshots here are extracted from the October 2024 fact sheet. As previously mentioned, while the fund has a benchmark defined, its flexible strategy actually can deviate significantly from the benchmark. In this case, M&G doesn't even bother to provide comparisons against the benchmark for the portfolio holding details. Looking at asset class breakdown, the fund currently has about 52% government bonds, 28% investment grade bonds, and 9% high yield bonds, which comprise the 3 primary components of the fund strategy. Additionally, there is about 8% securitized assets, 0.5% equities, and about 7% cash. Credit default swaps, or CDS, is implemented only for the high yield exposure. There is an industry breakdown, though it doesn't tell much, as more than half the portfolio are government or sovereign bond exposures. The rest are spread across industries, with banking naturally having the highest allocation, given bank bond issues are a big component in corporate bonds. Looking at credit rating breakdown, the fund appears to be in a more risk-off positioning, with a high percentage in investment grade ratings, in particular, nearly 70% in A to AAA ratings, translating to an average portfolio credit rating of A+. Majority of this should be attributed by high-grade government bonds, though it also shows quite an amount of the investment-grade corporate bonds are of high-quality rating as well. Looking at country breakdown, it gives us an idea of where the bulk of government bonds come from. In this case, it's clearly US and UK. The rest are mainly European countries, which suggests the fund doesn't have a strong view on emerging markets and Asia at the moment. That being said, remembering the fund is euro-based, the bonds held by the fund would either be euro-denominated or hedged in euro. The fund is almost completely in euro exposure. Looking at maturity breakdown, we can see the fund currently is still tilted towards long duration, with about half the exposure in the 3 to 10 year range and another 1/3 in the 15+ years range. The portfolio modified duration is currently 6.64 years. Finally, the fund fact sheet does provide a top 10 issuer list, which doesn't really mean much as there are over 200 issuers and the majority of the exposures are the US and Europe sovereign bonds anyways. Again, there is no mention of the effects of leverage in the portfolio holdings information. Purely based on this information available, it does appear that the fund is currently positioned more risk-off, with a very high allocation in high-grade government bonds and corporate bonds. It would be interesting to see how this translates to performance and the optimal income that the fund aims to deliver. The M&G Optimal Income Strategy is managed by co-managers Richard and Stephen since the strategy was incepted in December 2006. Richard is a veteran in the fixed income investment field with 30 years experience. The Optimal Income Strategy is his most important baby, while he also manages a few other corporate bond strategies. On a side note, Richard caught a bit of an unnecessary publicity in 2014 when public news found out that he was the highest paid person in Prudential for that year, as the Optimal Income Strategy had a great performance year and back then was one of the most popular bond funds around. The good times didn't last forever though, and both co-managers have held on through market ups and downs till today. Stephen is a true blue M&G employee, having worked there since 2001 as a graduate. He has climbed through the ranks and is currently the Deputy CIO of Public Fixed Income and Head of Wholesale Fixed Income Business. Besides all the management level responsibilities, he is also involved in managing several other funds that are mostly high-yield strategy related. Something unique I like about the M&G Fixed Income team is that the fund managers get together to publish blogs on investment-related topics on a website called Bond Vigilantes. From the articles published, you can get a better feel of the fund manager's character and views about investment and life in general, which gives it a more human touch instead of being just a name on a fund fact sheet. They even started a comic. How many fund managers, or even us, can proclaim to be a comic book character? That's Richard and Stephen in the comic cover page, by the way. Next, let's take a look at the share classes available for the fund. But before we do that, we will need to clarify that there are actually two M&G Optimal Income Funds. The one that is offered to most global investors today is the M&G Lux Optimal Income Fund. This is a Luxembourg domiciled SICAV structure where the fund family is M&G Lux Investment Funds 1 or IF1. There is another M&G Optimal Income Fund that is a UK domiciled OEIC structure, where the fund family is also called M&G Optimal Income Fund. Yes, this is a fund family with only one fund. The UK version is actually the original fund that was incepted by Richard in December 2006. Stephen joined as a co-manager a few months later. In September 2018, due to ongoing concerns and uncertainty about Brexit, and also in consideration that a Luxembourg or Ireland fund vehicle is more suitable for global investors, the team decided to launch exactly the same strategy and portfolio in Luxembourg, which is the fund you see today. Both funds are still running live, with the Luxembourg version obviously attracting global investor monies and is now at AUM of 9.66 billion euros, and the UK version having AUM of 1.4 billion sterling. The UK version continues to have only sterling share classes and cater mainly for UK investors. The Luxembourg version, on the other hand, has a wide variety of share classes, which we will cover now. As mentioned at the start of the video, FundInfo website shows 77 share classes registered in Singapore for the M&G Optimal Income Fund. I don't know why M&G has to make share classes such a complicated matter, but to avoid making this into a 3-hour video nobody wants to watch, we will cover only the Sing dollar and US dollar retail share classes here that are the main share classes used by most retail investors in Singapore. M&G Luxembourg funds usually use alphabet A to represent retail share class. There is also a V share class used here, which is for retail as well but slightly different, which I will elaborate in a while. The M&G Optimal Income Fund is euro-based currency, and all other currency share classes are hedged, hence the alphabet H in all these share classes. There are accumulation share classes for US dollars and Sing dollars, which are what I would suggest to go for if you have no need for income payout. There is a semi-annual distribution share class for US dollars, represented using alphabet S. All others are monthly distribution share classes, represented using alphabet M. The F, F1, and F4 refer to share classes that pay distribution based on a predetermined yield. In this case, this refers to share classes that are paying out higher than normal yields, which I will also elaborate more. Most of these share classes were launched in 2018 when the fund was incepted. There were a few higher payout share classes created in 2020 and as well in April 2024. Management fees for the A and V share classes are 1.25% per annum. Up to 60% of the management fee can be paid by M&G to distributors as trailer fees. TER comes to about 1.34% to 1.38%, as other expenses for different share classes can vary slightly. The A share class allows distributors to charge up to 4% in terms of subscription fees. The V share classes are likely offered to one or a few distributors only as an exclusive launch. V share classes have no subscription fees, but have instead a fixed 2.5% redemption fee. V share classes will be automatically converted into the equivalent A share classes after 2.5 years. Considering subscription fees are usually much lower than 2.5% for bond funds, investors who went into the V share classes should be ready to stay invested for the full 2.5 years to avoid paying the high redemption fee. Given so many different distribution share classes, the distribution yield policy is quite confusing for this fund. As per the fact sheet, the fund's underlying portfolio is currently generating only about 3.18% yield. The normal distribution share classes are paying out 4.6% yield. The F series of the distribution share classes that are supposed to pay out even higher rates are paying out 4.9% to 5.3% yields. Additionally, the prospectus MPHS states that the F series are supposed to pay a fixed 7% and F1 series are supposed to pay a fixed 6%. All these payout yields are way higher than the fund's portfolio yield, which means the difference has to come from capital, as per the warning given in the offering documents. We will come back to this topic as we look at the fund's performance next. The M&G Optimal Income Fund has a long track record for almost 20 years. For easier comparison, I will use the US dollars share class 10-year performance as per provided in the fund fact sheet for reference. Again, benchmark comparison is irrelevant for this fund due to its flexible strategy. The bond market has seen bouts of volatility every now and then, and this is quite clearly observed from the cumulative line chart provided. The fund averaged an annualized 3.0% in the past 10 years and 2.0% in the past 5 years, with the largest drop of minus 10.2% in 2022, followed by the largest up move of 12.7% in 2023, as a result of the rapid interest rate changes during this period. Other negative years were 2018 and 2015 of minus 1.2% each. If we factor the management fees, the fund would have been flat for both years. On year to date, the fund is slightly up at 1.8%. While these numbers look a bit uninspiring, let's throw in some comparisons. Assuming a typical retail investor is looking for income, the most direct place would be global investment grade bonds and high yield bonds. I use the iShares Global Corporate Bond UCITS ETF or CORP and the iShares Global High Yield Corporate Bond UCITS ETF or HYLD as a passive comparison in this case. For starters, we can see CORP delivered only 0.01% per annum in the past 5 years, while HYLD delivered 2.78%. M&G Optimal Income Fund sits in between, tilting towards HYLD. On calendar year basis, both CORP and HYLD were clearly worse off than M&G Optimal Income Fund in the down years of 2015, 2018, and 2022. On the flip side, positive calendar years were mostly better for the two ETFs. These findings suggest that M&G Optimal Income Fund puts quite a lot of effort in managing downside risk and volatility, so that the magnitude of returns on both the up and downside are lesser than the ETFs. However, on long term, this strategy has turned out well with overall returns quite decent compared to the ETFs. Purely looking at these numbers, M&G Optimal Income Fund is clearly better than CORP. And while overall numbers look slightly lower than HYLD, the fund does take significantly lesser volatility instead. Next, we throw in PIMCO Income Fund, the one fund that most global diversified bond fund managers hate to compare against. On 5-year and 10-year basis, M&G Optimal Income Fund is just slightly lower with 0.22% and 0.13% gap respectively. On calendar year basis, the two funds have their fair share of leading and lagging, with PIMCO Income Fund slightly ahead year to date. Based on these numbers, I would consider both funds on par with each other in performance, which is interesting considering PIMCO Income Fund has substantially more US exposure, while M&G Optimal Income Fund has more Europe and UK exposure. So perhaps an investor who needs more than one fund in this category can consider both. With these comparisons, hopefully you get a better understanding that it is actually the broad bond market that has been quite weak in the past 10 years. So the M&G Optimal Income Fund's performance is relatively decent. Now on the currency hedging of the share classes, if we compare the classes of Euro, US dollars hedge, and Sing dollars hedge, we can see that the US dollar share class performance has been about 1 to 3% above the base Euro class over time, and about 1 to 2% above the Sing dollar class over time. This gap translates to the currency hedging cost that fluctuates with market conditions and is quite consistent compared to the hedging costs of other similar mutual funds. With the performance numbers in mind, I want to quickly revisit the distribution policy of the fund again. Now we know the fund has about a 3.2% portfolio yield, and in the past 10 years delivers an average 3% return. How would a distribution yield of 4.6% or higher make sense? The only way to make this work is to sacrifice capital. Therefore, if you are invested in the fund's distribution share class, especially the F share classes with higher predetermined yields, be prepared to see the NAV of the fund go down over time. This is not unique to M&G Optimal Income Fund, by the way. Many bond funds today are providing distribution yields higher than they should be. So be well informed and aware of what you are investing in. Finally, let's summarize our findings and start with the good stuff. M&G Investments has come a long way since 1931 and has established itself originally as a boutique UK fund provider and has evolved to a more global presence in recent years. Richard and Stephen have worked in M&G for decades and have been managing the fund since inception in 2006. It is good to see them persevere through the good and bad times of the fund and evolve the fund strategy for the better over time. The strategy of M&G Optimal Income Fund is highly flexible. In fact, more flexible than most other global bond funds that I have seen. Enough details of the strategy is available to investors, but only if you know where to find it. The fund has a long track record of nearly 20 years. Performance in the past 10 years have been relatively decent comparing to bond market ETFs and competitors. Let's talk about the bad and the questionable stuff next. The fund has way too many share classes. I always believe share class management is a product development problem and has nothing to do with the fund managers or the fund strategy. So the M&G product development team should think this through and simplify the offerings instead of complicating it for investors. The information of the fund strategy in the Swiss website can be easily made available for other country websites. So why not? While the fund strategy is intended to be highly flexible, some of the features can potentially be risk factors. For example, the ability to invest in equities and the ability to leverage up can both turn out disastrous if not done carefully. The trust is on the fund managers to handle this well, given their long experience in managing the fund. Last but not least, the high distribution yield provided by the share classes of the fund is potentially a problem, because investors inevitably will be getting the capital growth impacted and end up potentially seeing their investment values go smaller over time. While this may be the intended design, and that many competitor funds are also doing the same, it may be good to still give investors a choice of going for a lower distribution share class without sacrificing any capital. Optimal doesn't have to equate to high, and some investors may also like to have optimal income accompanied by healthy capital growth. This concludes my absolutely biased comments on M&G Optimal Income Fund. Would you invest in the fund or give it a miss? Or are you already invested in it? Do drop a comment to let me know what you think. Additionally, if you find this video useful and would like to see more related contents, please click on like, subscribe to the channel, and share this video to your friends. Thank you and have a great day.